Para quem não me conhece, meu nome é Felipe Corsini, sou responsável pela área de Third Party Distribution aqui no Brasil para clientes corporates e institucionais. E é um prazer poder receber vocês aqui no evento que se tornou referência no segmento. Bem, a ideia do Global Managers Conference é promover investimentos internacionais para toda a nossa base instalada de clientes no Brasil e criar toda uma marca para os nossos managers aqui representados pela área de Third Party Distribution. Agora nós vamos passar para o inglês para receber os nossos painelistas internacionais e para aqueles que se sentirem mais confortáveis, a gente disponibilizou headphones, onde haverá a tradução simultânea e que estão com as nossas promotoras aqui ao longo do salão. So let's switch to English. When you think about understand the global scenario, it's absolutely essential to understand the China positioning. In this sense, I would like to invite João Scandiuzzi, partner and strategist chief of BTG Pactual Wealth Management, to discuss our next panel, China reopening and its impact on the markets, along with Corinna Lau, portfolio manager from Invesco, and Mr. Sungkeun Kim, global equity strategist from Mirae, join us online. Please, guys, welcome.
Thank you. Good morning, everyone. Thank you for being here with us. I think it's very exciting to be able to have this panel with Corinna and Sung to discuss China. They are both dedicated investors. Corinna's a portfolio manager dedicated to China. And also we have Sungkeun Kim, who's China Equity Strategist. So I think we have a lot to cover. I mean, there's plenty going on in China, a lot of changes most recently. And also, if you look for a number of years, I mean, China is always very, very rich in terms of developments. So without much further ado, I'd like to discuss the reopening. I mean, it's been 6 months since China drastically changed its policy, COVID policies, and fully reopened. So how has China evolved since, especially in the first quarter? What has happened? And how does this recovery compare to previous economic cycles in China? So let's start with Corinna, please.
Sure. I would say that with China reopened, first thing is that everybody is very happy because we can go out now. So if you look at the activity, you can now see people everywhere in restaurants, in shopping malls, in cinemas, etc. Now, so looking at the data, a reference point would be the Labor Day holiday. So that is the latest long holiday that is in May. And we will see that in terms of traveling in China, it's already surpassed that in 2019. That is already above and much higher than we see before the pandemic. So I would say in terms of activity, in terms of traveling, in terms of mobility, is definitely all moving up. Yeah, so that is what we've seen on the ground. Now, to your question about how does that compare to, say, in the past in terms of recovery. Now, I suppose all the different types of scenario, different recovery are very different, and this time is very unique because we are having a pandemic. And I would say to a certain extent, the knockdown is very much self-imposed. So I would see that data first check up very strongly in terms of the servicing side. And I think the next phase, we just need a little bit more time for people to very much recover fully in terms of the next phase. Now, earlier in the past or previous cycle, a lot of the recovery are very much driven by investment. So that is where China going out to spend in terms of infrastructure, in terms of roads, railways, linking up the whole country. Now, and that is very, very important because which means that exports is much cheaper because with the infrastructure that has already been built. Now this time, because of the nature of it, of the COVID, now the recovery, and also the fact that China is now moving on to more domestic demand-driven economy. So we were likely to see the recovery more driven by the domestic recovery. We have seen the first recovery, and we now need to wait a little bit further for things to really move up into the next level.
Thank you. Sung, you're joining us from Korea, so would you like to add something to what Corinna has just explored here?
Yes. First of all, I completely agree with Corinna's view that this is more of a services-driven recovery. It's driven more by domestic consumption rather than by investments as in the past, as in like 2008 or 2015 and 16. And I think also like to add that I think this time the scope of China's stimulus could be much more limited compared to the previous recovery phases. I mean, in 2008, China initiated a stimulus package worth 4 trillion yuan, which is like equal to 12% of its GDP at the time. And this time, I think it's quite reluctant to spend that much money on stimulus this time. And I think in terms of the contents of the stimulus, it'll be much more focused to driving up consumption rather than driving up investments this time.
Thank you. I continue with you, Sung. I mean, we have seen lately, especially in April and May, some data showing that the economy is actually losing steam after a very significant rise in first quarter. This data have been disappointing. Just to mention a few, we have seen exports disappointing quite a bit, manufacturing, investment overall, real estate, and also the credit data. How do you interpret this movement, this latest loss of steam in the economy? Is there something more structural going on? And what do you already mentioned something about a smaller stimulus, but what exactly are you expecting? We have seen already PBOC cutting the most significant benchmark rates over the past weeks. What else can we expect from the government in this cycle?
Well, I think in terms of the stimulus, like as I said before, it'll be more focused on trying to rev up consumption this time. I think there are some reports on various news sites that the government's attempting to use tax breaks on EVs, for example. And although it will also, I think, prepare some support for the real estate sector as well. It will be much more focused on driving up consumption this time. And I think in terms of the recovery, I think the weakness of recent data has something to do with the less than strong consumption of the Chinese consumer. And I think that's because the marginal propensity of consumption is going down. It was, I think, high when China first opened up, but due to, I think, the lack of recovery in the real estate sector, which could dampen wealth effects, and due to the fact that maybe youth unemployment is so high right now. It's about 20% at the moment. And because these generations tend to have a higher propensity to spend on goods, and that could be another factor in dampening the consumption sentiment at the moment. So that'll be maybe a much more perhaps structural factor in limiting the recovery.
Okay. Corinna, are you expecting anything more specific in terms of funding for example, infrastructure investment or some relaxation of real estate policies?
Yeah, In terms of the easing, I agree with Sung. It's likely to be adequate, but it's unlikely that we'll see very, very strong stimulus. Because if we look at the GDP growth, I think the market consensus is still it's likely to be mid-single digit. So that's why, from the authorities' point of view, they would do the easing as long as needed, as versus really really strong in terms of stimulus. And as you mentioned, in terms of infrastructure investment, that is always be the point or the case where that would be one of the options if needed in terms of bringing much further growth. Just one more point to add in terms of your specific question about the data earlier where we see servicing jacking up really strongly and then losing a bit of steam in around April, May. What I want to say is that the market, when we look at it, very much take reference as we see in the developed market or the Western society in terms of the recovery. But one difference is we also wanted to mention is that in the developed market during the pandemic, in fact, there has been a lot of subsidies going into the general public to compensate in terms of the income loss. Now, in Asia and China, on a relative basis, that is not as strong. Now, the beauty, very simple terms, is that we don't have the inflation that we've seen in the developed market. Of course, there's more reasons than that, but that's definitely one of the reasons. And so it really would take a little bit more time for the economy to very much recover or for the domestic demand to very much pick up. But the market does have very high hopes, taking the reference of what we've seen in the developed market, and that is one of the reasons, I believe, in terms of the gaps that we've seen.
Thank you. And Corinna, I mean, China is aging very rapidly. I mean, we're past the demographic bonus there for quite some years now. What kind of opportunities and challenges does this pattern of population aging pose for China and its ambitions to overcome the so-called middle income trap?
Yes, definitely. We in China are getting older. A lot of the economies, we're also seeing that trend, but as we all know, that does pose challenges. But I also want to basically offer a few or positive or silver lining that we've seen. The first is that China has been doing quite well in terms of increasing in terms of the productivity gains. All right. Now, for example, if we take automation, you'll be surprised in terms of the automation. China is almost half of the automation from a global basis. Now, if we look at it from percentage of the total employee, say, for example, if I involve with having robotics in the manufacturing, China is actually higher or par with the US. Okay, we are shy from Germany, so Germany is still higher, but the rate is actually catching up very fast. So what I want to say is that when we look at aging population, of course, we look at it in terms of the labor force, and of course, the second is, apart from the labor force, is also in terms of the quality and the efficiency, and that is where productivity gains come about. So that's why I mentioned the point in terms of automation. And in terms of innovation index, again, China is very high. In particular, if you look at the GDP per capita, it's really, really high if they look at the same category. It's very much at par with a lot of the developed markets. I would say if you look at the data now, it's very much, you'll be surprised that it's about, for example, Israel. Yeah. So that is some of the points just want to mention in terms of the population.
Okay, so they can actually maybe overcome part of this headwind with higher productivity and automation. And,
yeah, I think that's definitely challenges, but those are the opportunities that we've seen, and we still have, I would say, some time. And if the productivity in terms of automation, robotics, because technology we're talking now is very different from 30 years ago. So that's why in terms of narrowing the gap, it is much more positive than where I would say some countries of economies experience in the past, say, 20 years or so.
Thank you. Sung, what's your thoughts on that? And maybe if you can mention some opportunities maybe in the service sector as well as this aging population opens up?
Well, actually, we have a big aging problem here in Korea as well. And like Corinna mentioned, that actually led us to develop quickly in terms of automation and putting robotics in terms of production. And in terms of the services industry, because there's been a significant lack of labor and labor force, we've been using more and more automated devices when it comes to our services at the moment. And that could also be one of the the impetus to tackling the aging problem and using that as an opportunity. But I think in terms of the cost that the aging process can entail, there's, I think, a problem to do with moving up the value chain to, to really move into a higher income status, because when you're aging and losing your workforce, you lose your competitive edge in some of the lower value export manufacturing goods. And as you lose that, the key points to moving up to a higher income level is to losing those industries, but gaining more in terms of higher value goods. And I think that's what China is attempting, and we should see what its progress is going to be on that front.
And just on that point, I mean, what opportunities do you see in China on the ground? What competitive advantages do you see? Specific niches that China could be highly competitive in the long run? And also if you see any unique opportunities in the China economy regarding new technologies, new markets?
I think China's perhaps unique advantage would be its huge amount of data that it has. In part, that's coming from its massive population, and in part, it's because its population already has high access to the internet, and that equals to a huge amount of data that China can use. And this amount of data is a big advantage when it comes to developing artificial intelligence, because artificial intelligence is all about gathering data, processing massive amounts of data to find new trends and trying to discover new opportunities from that trend. And if you have the amount of data that China has access to, and that could be a big advantage when it comes to developing AI. So I think artificial intelligence could be China's unique strength.
Interesting. How about you, Corinna? What do you think are the unique opportunities?
Yeah, I agree with Sung. In fact, if you look at digitalization, the rate, for example, people utilizing payment apps, etc. In China, it has been the highest in the world. If you look at from an infrastructure, a digital infrastructure perspective, China actually dedicated a lot of efforts. So if you look at it in terms of the cost, in terms of the speed, say if you go into internet or using your mobile, etc., that's very fast. And also the cost is lower. And that makes happen what we've seen now in terms of digitalization. And that's, as Sung mentioned, it also, the technology is there to make it very well equipped in capitalizing from the artificial intelligence and digitalization moving ahead. Now, the other thing, apart from that, I want to mention is that you probably heard also about the electrical vehicle. China is also dedicated to net zero. We'll talk about 2060, but that has been a lot of directives and initiatives there. So in terms of the electrical vehicle take-up, at the moment, China is very high, and it is expected, say, 25 or higher, and in the next few years, it's going to be moving even higher. Right, and if you just look at, and it's not about only electrical vehicle, but it's also about the whole supply chain in terms of, for example, the manufacturing of it, the battery, etc. And some of the data just show that in terms of the battery, the EV battery, is likely to be over 20% CAGR in the next few years. So again, as we all know, China has already a very large market, very large demand on the electrical vehicle. I would say it is I would have to say it's a very successful story from China, and definitely would be able to benefit further from that, not only domestically, but also exporting as well. So that is another, I would say, competitive edge that will translate into, I would say, decent investment opportunities.
So it seems that China is well positioned in a number of sectors to really compete and to flourish. And especially when you mentioned, I think AI is very important because, I mean, of the indirect impacts it will have on the overall economy in terms of productivity. So it's a very important aspect to be competitive at. Looking, Corinna, at the Chinese equity markets, there are lots of investors that think they are cheap, right? But year to date, the market remains volatile. I mean, there was a revival late last year of the reopening, but it has been quite volatile. What is your view in terms of the valuation of the markets, and how do you see, I mean, regulatory risks at this juncture?
Okay, I think definitely what we see is that we do feel that valuation is very comfortable. Now, compared to developed markets, compared to US, we were at 30-40% discount. If we look at it from a long-term averages, like if we take more than 10 years, again, we're below the historical average. And then when you look at the index composition, I'm talking about index first. Now, if we talk about 15 years ago, there's nothing like the internet areas, right? So which means there's much higher growth coming. So in terms of the valuation, that definitely should be higher. Now, of course, we recognize that there's quite a bit of changes in the last few years with the pandemic and also earlier some regulations that investors may wanted to really look at it in terms of developments. But I would argue that for a medium-term basis, it's definitely attractive. Because if you look at it, we're talking about a second largest economy. And definitely growth is unlikely to be as high in the past. That is, it's unlikely to be, say, 10% or 9%. But in general, the market is talking about mid-single digit. So let's say even 5% growth on the second largest economy, you would appreciate the investment opportunities that would be there. But we're not acknowledging there has been no changes. Now, some of the changes we've seen, the market has been volatile. I would say not only in Asia, but in China, but also externally is a rising interest rate environment as well. And I think that is very key. But having said that, I would say single stock differentials or sector differentials has been higher in the last few years. So again, this is of course making more challenges for managers. But on, I would say, a very high level perspective, definitely a lot of opportunities, and the valuation, I would say, even with certain discount, is comfortable.
Sung, I mean, what's your view on that? And if you can maybe add some color in terms of sector valuation.
I think in terms of valuation, I think you have to recognize some of the structural factors that's going into the current valuation at the moment. I think Corinna mentioned before about regarding growth. China's growth is slowing down at a gradual pace. And if you think about why investors go into EM in the first place, it's to invest into places that you can't really gain from developed markets. So you're looking to invest into places that you can expect like 5 to 7% GDP growth rather than the 2% growth you can expect from developed markets. And if growth is a premium factor, then China's slowing growth is a negative in terms of valuation. And I think the current valuation in part takes in account of this fact. And I think the second perhaps structural reason might be the regulatory risks involved in Chinese markets at the moment, because it's becoming less predictable compared to the past. And I think that can also play as a factor into current valuations.
Okay. I mean, still, we have, I mean, this view, and Corinna expressed it, and you pretty much mentioned it, that the equity market's relatively cheap on a global basis, at least. Maybe the reasons are those we have discussed here, but what do you see as catalysts for a re-evaluation of this market? What would you be expecting to happen for us to see this value to be unlocked?
I think I would expect to see two factors for that to happen. The first would be what kind of stimulus the Chinese government comes up with. Because when you look at the Chinese equity market coming into 2023, part of the reason why it lagged behind other countries was in part due to less than expected strength of the recovery. So if a sufficient amount of fiscal stimulus came into play, then that could definitely provide a jump to Chinese equity markets. And I think the second factor would be when you look at the US market this year, a big part of the reason why the US market outperformed is to do with AI. So if some of the Chinese tech companies showed promise in AI, if they show that developments in AI translated into improved earnings for those firms, then that could provide another boost and maybe catch up to some of the other US firms.
What's your thoughts on that, Corinna?
Yeah, I think the company earnings, if we see the earnings coming through, which the consensus is that this year we're likely to see improvement in terms of earnings, I think that would be assurance for investors. So that would be one of the catalysts that I believe we should be watching. The other ones is we talk about the domestic demand earlier was stronger, and then some of the data now was losing a little bit of the momentum. For us, as I've mentioned, we expect that to gradually recover. And I think where the data has come through, where the investment community see that the domestic demand can, in fact, really recover to a very good extent and growing, I think that again will bring confidence back, and also that will be another key catalyst that we can watch.
Okay. I mean, in the past, we have seen the real estate sector playing a large role in Chinese growth, exports as well, very important, infrastructure. All these areas seem to be somewhat subdued for different reasons at this moment. What do you see as the main factors that will power ahead Chinese growth going forward?
You mean what factors that would drive China's growth looking ahead, okay? Earlier we mentioned about the recovery of the domestic side. I think that definitely would be one of the key growth areas that would drive China looking ahead. We've mentioned earlier about the electrical vehicle, again, and also AI. The digitalization technology, that will in other areas that will definitely drive growth. Now, if I elaborate a little bit further, because where we look at the domestic demand, I would say that within domestic demand, there are different sub-trends. So it's not I mean, it's generally will be an uptrend, but there are definitely areas that would do better within the domestic demand side. One of it would be the domestic brands. So from an investment opportunities point of view, we do see some of the local brands, they are now gaining market share. For example, if we talk about sportswear apparel, people, of course, still like the Western brands. But some of the Chinese brands, for example, even we talk about sportswear apparel, they may have the Chinese button, etc. So it's more tailored to the local taste. I think this next phrase is that we do see some rise in taking up market share of the domestic brand. The other thing in terms of the demand on the domestic side is that, of course, China is very big. We have the coastal cities, which on a relative basis, the income is relatively higher. And then we have the inland cities. In fact, some of the survey actually mentioned that 60 or 70% of the growth from the domestic side were likely from the inland cities. Now, so there are companies that have specific strategy in tapping the demand in the inland cities. For example, at the moment for the inland cities, for example, a value for money it still be something that is of more important for the inland cities. So company does have strategy, say about buying with discount, etc. So again, that would lead to further growth of some of the companies. Again, that would be some of the drivers because that will lead to better margins for the company that we invest. So those are areas that we are watching.
So how about you? Where do you see these new drivers of growth for China, and how does that translate into your equity strategy recommendations?
I would definitely agree with Corinna on consumption being the next driver of Chinese growth. Because if you look at consumption as a share of China's GDP at the moment, it's still in the mid-50s. And that's a much lower figure compared to other like manufacturing heavy-based countries like Korea, which is about 65%, or even Germany, where it's 70%. And so there's definitely room for domestic consumption to catch up to those levels. And I think the key to that would be to unlocking some of the savings that the Chinese consumers have, because they have a very high savings rates, especially when compared to other developed or other emerging countries as well. So, and focusing on consumption, I think, also makes sense from a securities point of view, because with like U.S. policies like the Inflation Reduction Act, which kind of promotes made in USA products. And that means that in terms of China, its export markets are being more and more restricted. So I think on a security basis, focusing on domestic consumption, trying to boost domestic consumption definitely makes sense. And I think in that sense, it would I think investment strategies need to be concentrated on those domestic consumption names as well.
Okay. It's interesting that you mentioned the U.S. Inflation Act, and I'd like to take a step back now exactly and try to compare China from a longer-term perspective. What has happened since pre-pandemic to now? I mean, a lot has changed, of course, in the country in terms of social politics, but also international relations have changed a lot in the past many years, especially U.S. and China tensions. They have flared up. They have transformed from a trade dispute into a technological dispute more recently. How do you see this affecting China's long-term prospects and its policies to deal and cope with this new situation? Sung.
I think compared to pre-COVID times, we need to, I think, focus on two main changes that has happened since then. First would be the increased amounts of supply chain diversification from a company's level, because ever since experiencing COVID, companies based in the US or in Europe, they recognize that concentrating too much of their production base in China could lead to potentially some problems when it comes to supply chain problems, because during COVID, everything in China was on lockdown for a while and companies couldn't just get out their goods in time. So that's led to companies trying to diversify their supply bases away from China. And I think this factor is a structural factor in essence. And in terms of China's long-term growth, this is, I think, a negative factor because it will translate into maybe less employment within China, as well as maybe a lack of competition within China as well. And the second, I think, development that definitely impacted China would be the US-led tech sanctions. I think even before COVID, there were some sanctions, such as sanctions on Huawei or ZTE. But after COVID, some of these sanctions have been strengthened, and most importantly, in terms of semiconductors, the US led a hard semiconductors ban. It led a movement trying to prevent advanced semiconductors being exported to China. And this could definitely lead to some implications for long-term growth, because I think we mentioned AI in the previous discussion, but in order to develop AI, you obviously need a lot of advanced semiconductors. And I think the US kind of recognizes this and is trying to employ this method in order to kind of stymie China's developments in AI. So those could be some of the implications since COVID.
Corinna?
Yes, there are definitely some challenges, and I think the market are generally seeing that as maybe some of the negative hinderings in terms of China growth. Now, I just want to offer also some of the different thoughts. Now, in terms of the technology side, it is correct that there is policies to, I would say, restrict the transfer of very high-end technology on the semiconductor side on China. But having said that, you appreciate most of that, we are talking about the high-end side. And in terms of the demand, nowadays we utilize a lot of the semiconductors, and not all of those are related to the high-end. Okay, and China is basically 1/3 in terms of the global revenue or global demand. So for a lot of the Western companies as well, it is very much important to be able to export to China. Because otherwise, we are talking about building up capacity, even onshoring in the different Western countries. If you're going to lose 1/3 of your market, that will be quite a lot of excess capacity. So that is another, I would say, another perspective. I think we should look at it. One more perspective on this front I want to share is about the standard. Okay, because we're talking about different technology standard. Now, in the past, it's very much dominated by the standard from the developed markets, I would say. But the good thing or the strength about in China is that we have a very large population. So if a very large population is utilizing a particular standard, that means that there are rooms for competition. So what I want to say that we do see some challenges, but there are also silver lining as well. And the authorities in China, they have also made a lot of efforts in basically moving up in terms of the technology on semiconductors, etc. So definitely this would be a key area for us to watch. The other thing I want to mention, I agree with Sung in terms of the onshoring. Now, definitely we are now seeing onshoring, basically different parts of the world. And the same, we are also having onshoring in China as well. So some of these semiconductors, China actually wanted to build it onshore in China as well. It is definitely, you are right. In fact, before the international relations or some of the tensions that we've seen, some of the low-end manufacturing, they're already moving on to, for example, some of the Southeast Asian countries, for example, Vietnam. But if you look at Vietnam, also sometimes people overlook is because Vietnam is on the border of China. Because the value chain is very complex. So I could have part of it manufactured in Vietnam. It could be eventually transferred back to China. So because of that also, I would say definitely we will see some moving away, but at least in the short, medium term, the bulk of it, we cannot, if you look at it from a landmass, Brazil is very large here, China is very large, but other Southeast Asian countries, I would say in terms of the land, in terms of labor, and most importantly, the infrastructure that we talk about. Because that means we would be able to export it in very low cost, all right? Now, India is building up the infrastructure, but it will take a bit of time. So again, all those is just thoughts for discussion and definitely a space to continue to monitor.
Okay. No, thanks. I think it's very important to highlight this. I mean, the size of Chinese market and the opportunities there are there to upgrade, and also the interdependency between West and East, right? There is a dispute, of course, but at the same time, there's a lot of interdependence and there's opportunity for cooperation still, I think.
Definitely.
Okay. Turning to another topic, I mean, as an emerging superpower, China is claiming a bigger role in terms of global international finance and the global international financial architecture. How do you see this? I mean, what kind of role can China play, the Chinese yuan, going forward?
Now, in terms of the renminbi, China's always wanted for more usage from a global basis in terms of the renminbi. Because if we look at it from a trade perspective, it's close to 20% in terms of the GDP or global share of GDP. And in terms of renminbi is at low single digit or a mid single digit, right? I think there are both opportunities and challenges. Now, opportunities is now, say, China when trading with the Middle East or with Latin America, now more renminbi is using. Okay, so definitely we are on a moving in the uptrend. But I think one of the key when we talk about currency is the capital control. Okay, now which means that bulk of the renminbi within China. So we're talking about offshore renminbi. Now the capital control, of course, provide a lot of good things, in particular in the past, and that's why we're still having that in terms of stability in the markets. So that is a key thing, and I think I would say this is a decision to see how things we're going to move up from there, because I don't think at this stage China will make any major changes to that, but that will again depending on the pace for renminbi to go internationalized. Yeah.
Okay. Sung, how do you relate that with financial reform that has been ongoing, of course, for forever, always, but has evolved quite a lot. But how do you see going forward this financial reform and this relation of the internationalization of the renminbi?
I definitely think the renminbi has a bigger role to play in international finance, but I think in some aspect, when you look at things from a longer perspective, I think you can approach it in terms of China's renminbi playing a bigger role in a Sino-centric bloc. So I think Corinna mentioned more relations with South America, more relations with other emerging economies, and the renminbi could definitely play a bigger role facilitating transaction within that block. But I think for it to gain share relative to the, say, the US dollar, it will take, I think, a much longer period of time because the other block will, I think, show some kind of restraints when using renminbi due to the capital controls that Corinna mentioned. Okay. So I think within the block that China could dominate, the renminbi could definitely play a bigger role.
Okay, thank you. Well, I think we have only time for a final question here. I'd like to address your views on the real estate market, especially because, I mean, construction has been a key power for the Chinese growth, and also one that has great linkages to commodity markets, and especially to Brazil is very important for our iron ore exports. Are we past the peak, and what's the outlook there for real estate construction going forward, Sung?
Well, I think real estate definitely has been a big driver of Chinese growth in the past. But I think going forward, the main problem that China has to tackle from now on is the oversupply of real estate at the moment. So although population is gradually declining, real estate supplies have been consistently going up, and that led to a large amount of oversupply in the market. And that means that going forward, it won't be easy for Chinese real estate prices to move up in a significant way, as we've seen before. And that could spell problems for consumption in general and the economy in general, as well as for commodities, because real estate has been the traditional driving factor in China.
Do you agree with that, Corinna?
I think definitely real estate is an area to watch. All right. Like the rest of the domestic demand, we've seen the domestic property sales pick up, and now we are slowing in terms of that. What I want to say is that, of course, where the reopening, first people go to servicing, restaurant, etc. And for people to commit into a larger chunk into the property, that probably needs to be more gradual. All right. And I think we need to see a balance in terms also of the policy support on that front. So again, this is something that I think is key and is important. And so this is something that we should continue to be monitoring.
Okay. Well, unfortunately, our time is up. I'd like to thank everyone for being here, and especially Corinna and Sung for joining us in this very interesting panel. Thank you.
Thank you.